Airbnb earnings. Stock crashes, but they love it. The recent Airbnb earnings report sent shockwaves through the market as their stock plunged. But here's the twist. They love it. Yes, you heard that right. While most companies dread the sight of their stock crashing, Airbnb seems to have found some hidden delight in this unexpected turn of events. As the numbers tumbled, so did the hearts of anxious investors. Yet, Airbnb seemed to wear a mischievous grin, whispering to itself, "Bring it on." Like a wild twist in a suspenseful movie, the stock crash added an intriguing layer to the company's narrative. Why, you ask? Well, that's the million-dollar question. It may be the audacious spirit of the disruptor, relishing the chance to rewrite the rules. But before we get into it, don't forget to like and share this video with your friends. Be sure to subscribe to our channel to get notified of the next video from us. Shall we start? Implications of the stock crash on Airbnb's financial standing. The stock crash undoubtedly has significant implications for Airbnb's financial standing. As the stock value plummets, it can impact the company's market capitalization, potentially reducing its overall worth. This can affect various aspects of Airbnb's operations, such as its ability to raise capital and pursue strategic initiatives. Additionally, a sharp decline in stock price may erode investor confidence and deter potential shareholders from investing in the company. It could also impact Airbnb's ability to attract and retain talent as stock options and equity incentives become less enticing. Therefore, the stock crash represents more than just a numerical setback. It carries the potential to shape Airbnb's financial trajectory, requiring the company to navigate through challenges and demonstrate resilience in the face of adversity. Factors contributing to Airbnb's stock crash. Several factors played a role in the stock crash experienced by Airbnb. First and foremost, the performance of Airbnb earnings played a crucial role. If the earnings reports fails to meet market expectations, it can trigger a sell-off, leading to a decline in stock value. Additionally, broader economic factors, such as market volatility or changes in investor sentiment, can also impact Airbnb's stock price. Competitor dynamics and industry trends can influence investor confidence and the perceived growth potential of Airbnb. Furthermore, any negative news or events surrounding the company, such as 1. Regulatory challenges, and 2. Operational disruptions. Those can contribute to the stock crash. It's important to remember that many factors influence stock prices, and a combination of these elements likely played a part in Airbnb's recent stock decline. Investor sentiment toward Airbnb following the earnings report. Investor sentiment towards Airbnb following the earnings report can be quite a mixed bag. It all depends on how the earnings report aligns with market expectations and the company's perceived growth potential. If Airbnb earnings exceed or meet expectations, investors may feel confident and optimistic about the company's performance, leading to a more positive sentiment. On the other hand, if the earnings report falls short of expectations, it can generate disappointment and skepticism among investors, potentially dampening the sentiment toward Airbnb. Investors' reactions can also be influenced by the following: broader market conditions, industry trends, and competitor performance. It's important to note that investor sentiment is subjective and can vary from one individual to another, leading to a diverse range of reactions following Airbnb earnings reports. Analysis of Airbnb earnings and profit figures. Analyzing Airbnb earnings and profit figures is critical to evaluating the company's financial performance. Revenue figures provide insights into Airbnb's total income from its operations, including number 1, fees, and number 2, commissions and other sources. It helps gauge the growth trajectory and market demand for their services. Profit figures, on the other hand, measure the company's earnings after deducting expenses and costs. This includes factors such as marketing, operations, and administrative expenses. Analyzing Airbnb earnings and profit figures allows investors and analysts to assess the company's profitability, efficiency, and ability to generate sustainable earnings. It provides a snapshot of Airbnb's financial health and can influence investor sentiment and market expectations. Impact of the stock crash on Airbnb's market valuation. The stock crash can significantly impact Airbnb's market valuation, which is the company's total worth as determined by the stock price multiplied by the number of shares outstanding. When the stock crashes, the decline in stock price lowers Airbnb's market valuation. This means that the company's perceived value in the eyes of the market diminishes. Lower market valuation can affect various aspects, such as the company's ability to raise capital, negotiate partnerships or acquisitions, and attract investors. It can also impact the perception of Airbnb's overall financial health and growth prospects, influencing investor sentiment and market dynamics surrounding the company. Strategies Airbnb may adopt to recover from the stock crash. To recover from the stock crash, Airbnb may employ several strategies. Firstly, they could focus on improving their financial performance, aiming to exceed market expectations in the future earnings reports. This might involve implementing cost-cutting measures, optimizing operational efficiency, or exploring new revenue streams. Airbnb could also prioritize effective communication with investors, providing transparency regarding their plans for growth and addressing concerns that led to the stock crash. Additionally, the company may engage in proactive investor relations activities, such as investor conferences or roadshows, to rebuild confidence and attract new shareholders. Strengthening its competitive position through innovation, expanding into new markets, or enhancing customer experiences could also be part of Airbnb's recovery strategy. Ultimately, a combination of financial performance, investor relations, and strategic initiatives will be key to regaining market trust and recovering from the stock crash. Comparison of Airbnb earnings performance with industry peers. Analysts and investors assess various financial metrics to gauge the company's relative standing when comparing Airbnb earnings performance with its industry peers. This evaluation involves comparing revenue growth, profit margins, market share, and other key performance indicators against similar companies in the travel and accommodation sector. By benchmarking Airbnb earnings against its peers, stakeholders can gain insight into its competitive position, market dominance, and growth potential. Such comparisons help identify if Airbnb is outperforming or underperforming in terms of financial metrics, providing a context for evaluating the company's overall financial health and ability to capture market share and generate sustainable earnings relative to its industry counterparts. Investor reactions and market response to Airbnb's earnings report. Investor reactions and the market response to Airbnb earnings report can vary depending on the results and the market sentiment. Positive earnings, such as surpassing expectations or showing significant growth, often lead to a favorable response from investors. This can result in an increase in buying activity, driving the stock price higher. Conversely, if Airbnb earnings fall short of expectations or indicate challenges, investors may react negatively, leading to selling pressure and a decline in the stock price. The market response is influenced by broader market conditions, investor sentiment, and the perceived outlook for Airbnb's future prospects. Analysts and financial media coverage also shape investor reactions and market dynamics following Airbnb's earnings report. Potential long-term consequences of the stock crash on Airbnb's growth prospects. The stock crash can have potential long-term consequences on Airbnb's growth prospects. A significant decline in stock price may erode investor confidence and affect the company's ability to raise capital for future expansion. It can make it more challenging for Airbnb to attract new investors or retaining existing ones. The reduced market valuation resulting from the stock crash may also impact the company's ability to pursue strategic initiatives, such as acquisitions or partnerships. Additionally, negative perceptions surrounding Airbnb's financial health can create hurdles in attracting top talent or negotiating favorable business deals. These long-term consequences highlight the importance of Airbnb to address the issues underlying the stock crash, rebuild investor trust, and demonstrate sustained growth and profitability to regain market confidence in its growth prospects. Analyst forecast and recommendations for Airbnb's stock amidst the earnings turmoil. Amidst the earnings turmoil, analysts closely observe Airbnb's performance and provide forecasts and recommendations regarding its stock. These forecasts are based carefully on analyzing the company's financials, industry trends, and market dynamics. Analysts may adjust their projections, considering the impact of the earnings turmoil on Airbnb's growth trajectory and profitability. Depending on their assessment, recommendations can range from buy or hold to sell or underperform. These recommendations guide investors looking to make informed decisions about Airbnb stock amidst uncertainty. Investors must consider multiple analyst perspectives and conduct their own due diligence to make well-informed investment choices in the face of the earnings turmoil. What will you surely remember among these guides we have for you? Comment down below and share it with us. Again, don't forget to like, subscribe, and share this video. See you next time.